All right, here we are on, where are we? Oh, January 25th. What an ugly month. I mean, I don't know what everybody else is talking about, but, and I don't know, CNBC, I gotta laugh. It's been, what, 40 years of watching it or whatever it was way back when. So background noise. And I'm telling you, at all market turns, it's always wrong. And always, we're into the place where when the people start talking about long-term investing as the market goes down, good luck on that one. How come they never tell you when to sell? There is a place to sell, believe me. Sidestepping a 3-year decline, 2000, 2001, 2002, saved you a lot of money and had insane opportunities in 2002. I remember back then you could buy AES, the utility, for $1. That was, I can remember the date, 10/14/02, because I wrote a piece about a market bottom, listed the utilities, and AES went up 1,600% by the first quarter. And I don't know, I was pretty young. That's 20 years ago. I was 42. And by then I had 20 years of experience. So I think a lot smarter now. And I just know to stand back here. Isn't everybody noticing that the put call isn't rising as we decline? That means what? See, look, sentiment is so misunderstood. It's not even funny. So what goes on is sentiment changes into bear market math. It does it in every single market. So where you think something's got a market bottom or was low enough, it's vastly different than you think. So what happens now is if the put call goes down to, right now, I think we're averaging like on the 10-day, I'll call it neutral when we're 90. Yet in the bull market, when we were 90, we'd be bottoming and rallying. We sure ain't bottoming and we sure aren't rallying right now, are we? So right now, 70% of the volume on the NASDAQ is down and 72% on the New York. We're making way more new lows and highs, and the volume is, or the advanced decline line is way net. Look at this, 3,391 issues down, NASDAQ 1263 up. Yeah, I don't think so. And even if you do bottom here, where are you going to go? You're not going to have a big rally back to the highs. You're still way overbought in every possible measure, and you're still more overbought than you were in 2000. So where do you think we're going? Nowhere. Unless we rally up 4 points before the close in the SPY, then you're just going to continue the downside pressure. Wouldn't surprise me if we go out on the dead lows of the week and the month and then start up February. But after the close, you're going to get Microsoft earnings. Microsoft earnings are going to be interesting because I think no matter what comes out, that stock's going to get sold. I don't care if they have good earnings. If it gaps up, you sell it. Same thing's going to happen with everything else. Look at, I think it was IBM came out, great numbers, boom, gets killed. That's the sign of a bear market. Doesn't take a genius to figure this out. All right, let's talk about what else is going on in the models. Where are we now? Let's see here. Oh, just gotta, let me get myself updated and we'll find out. Okay. Yeah. Okay. Oil's 85.17. Wow. We're above our new pivot of 83.77. That's bullish. And got no sell signals there. So you're getting pressure now, inflationary pressure, and gold's finally responding to it. I know in the Hulbert Digest that gold is saying that it's overbought in the extreme of people getting bullish, but sometimes that just can go on for a very long time. So let's see, where are we? The SPY is 430.85. We're down 2% there. We're down 2.73% in the Russell, more than, oh, wow. Wow, it's down more than 21% year to date. Full-blown bear market. It's just the way it is, folks. I think that the notes and the bonds are very interesting at 175 and 210 yield. They're kind of between a rock and a hard place. Now, the left wants lower rates, modern economic theory, blah, 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 blah. New Reaganomics from Janet Yellen. I don't know what the heck she's smoking. She needs to get off the crack pipe and just go be grandma somewhere, because she's not helping the situation. And her theory is ridiculous. Yeah, there's bad Fed governors too in history. What else can we do here? Copper is very interesting to me too. So what's going on here? I look at my screen, it's pretty red. You've had some bounces. Oil stocks act good. That's the only part of the market I think that acts any good. And that's all the pressure that's coming on everything else. It's like a big chain reaction. So I don't think you want to look for anything. Oh, let's address Bitcoin right now too. The model, my Bitcoin strategy manager model that's been short from, I don't know, 65,000. I got to look back. It's been short the entire move. Went to neutral again, only in the daily time frame. The other time frames are in such blatant sells that all I'm looking for is where do you sell the next bounce. Michael Saylor, sorry, buddy. You just came out and said you want to spend more money on Bitcoin, and now you've given up your gains at 30,000. So you're going to borrow money, sell stock, raise money, and buy more Bitcoin. If any money manager in the country did that, you would get sued, first of all, for overweighting capital, and you get fired from every firm on the street. So I don't understand that whole philosophy. It doesn't work for me. We're about creating alpha, and you're not creating alpha. Good luck. I don't see anything that I'm even remotely care about to deal with.